Hi friends, a lot of you have been asking about opportunities arising in electric vehicle space. So today I will talk to you about a company that caters to this segment. BLW Precision Forging, also known as Sonacoms, is one of the leading automotive companies engaged in designing, manufacturing and supply of systems and components such as differential assemblies used for battery electric vehicles (BEVs) and precision forged differential bevel gears for both electrified and non-electrified passenger vehicles, commercial vehicles, off-highway vehicles and three-wheelers. The offerings also include conventional and micro hybrid starter motors, belt starter generator and EV traction motors. In H1 FY23, India contributed 32% of the revenue, North America 42% of the revenue, Europe 18% of the revenue, Asia 7% of the revenue and 1% from rest of the world. Differential gears, micro hybrid plug-in hybrid starter motors, differential assembly which is BEVs, which is used for BEVs, and conventional starter motors contributed 31%, 21%, 21% and 17% each respectively to the revenue during H1 of FY23. Revenue share from BEVs has grown 22 times over 4 years, with absolute BEV revenue growth at 34 times. Of the overall order book of Rs 205 billion, EV contributed to 68%. This will translate into a higher contribution from differential assembly in the next few years. Over the years, the company has also gained market share in differential gears and starter motors. The company has multiple growth drivers in place. Let's look at some of them. Sonacoms is geared for stronger growth on the back of number one, increase in content. The increase in content in the Sonacoms product portfolio would be driven by two mega trends of electrification and premiumization. Electrification is driving an increase in content through the following: A. The supply of differential assemblies over just gears to BEV OEMs. B. Increased complexity due to substantially higher torque. And C. The opportunity to supply the complete differential assembly set with reduction and final gears. Number 2. New products such as traction motors, controllers and belt starter generators. And 3. It is entering the autonomous driving space with its integrated motor and controller module. Lastly, number 4, the starter motor business would benefit from the growing demand from hybrid cars. The company's revenue has grown at a CAGR of 34.2% from FY17 to FY22. EBITDA margin on average during this period stood at 27.4% as against 25% from FY12 to FY16. The company's return ratios are more than 20% in FY22 and it has a negligible debt to equity ratio. The company has witnessed volatility in free cash flows owing to large capex plan at various stages of life cycle and is expected to remain free cash flow negative in FY23, which would eventually turn positive in FY24. Some of the risks of investment include the inability to adequately scale up traction motors for two-wheelers and four-wheelers, which could pose a serious threat to the electricals business. The EV technology and its components are in the evolutionary phase, and any rapid change in technology could alter the competitive landscape for OEMs and component suppliers. At the current market price, the company is valued at 62.1 times FY23 earnings and 35.4 times FY24 estimated earnings. Compared to peers, it receives a premium valuation due to its increasing dominance in the battery electric vehicle segment. The stock has corrected from the highs of Rs 842 to Rs 461. The company is operating in an interesting space and it should be on the radar of investors. As per technicals, there is a demand zone in the range of Rs 440 to Rs 420. This is Viral Shah signing off. Happy investing.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.
Thank you.